Very good morning all. Welcome to Relativity's monthly webinar. People are joining with us. We are waiting for few more people to join. The webinar is going to start very shortly. Kindly hold on for a few minutes. Thank you. Once again, welcome everyone. Thank you for joining us for today's webinar. I am Divya from Relativity Management Solutions India Private Limited. I would like to introduce today's presenter, Mr. Akash. He is a successful young entrepreneur, speaker, innovator, and payroll expert who helps business leaders. He is the director at Relativity and he is well known as a financial specialist for over 13 years now. He is also a frequent guest at events hosted by NHRD, NIPM, Thai chapters, IAHR related to human resources, finance, taxation, and shared services. He has conducted more than 250 plus sessions offline and online, as well as Relativity's regular monthly webinars. He is the host of Relativity Knowledge Series, a young YouTube channel to help HR professionals to be better, and the lead author of our Relativity's blog. It's time to start our webinar. Let's start, and over to you, sir.
Thank you very much about that quick introduction, Divya, and good morning to all of the viewers here today at the webinar. It's such a pleasure to see you. I think I missed 2 months. This is the post 2 months today. We are getting to meet again. Thank you very much. The earlier webinar was taken by my very competent colleague Padmajyoti on the topic of investment proof verification, because November, December, Jan, February, March are the times when we have to look at investment. And the previous webinar we had to cancel at the nth moment because of my sudden personal unavailability. So after 2 months, it is so very refreshing to see you all today, and hope today's topic is quite interesting to all of you. We are talking about okay, let me save that for a little more slides. To our viewers on LinkedIn live stream, on YouTube live stream, and whatever live streams that exist, thank you for joining. You still have the option to join on the Zoom link if you are comfortable. Otherwise, if you are comfortable at the platform that you're attending, wonderful, good and well. So with that being said, let's move on to the topic for today, which is what employers have to do to be prepared for the EPS verdict that recently came out from the Supreme Court. I mean, I appreciate the timing of the verdict because it just made everything a lot easier. We got to know that after the verdict on the 4th of November, that is absolutely the topic that we had to speak today. No other options at all. So here we go. Let's decode the verdict for us to understand see, we all know that there is some verdict about EPS. Yes, I'm sure you've also seen the widespread publicity given to the verdict in the newspapers, on online media, everywhere. But then what exactly it is, what has happened in the past, what are they talking about the Kerala High Court squashing, the Rajasthan and the Delhi High Courts also squashing, is something that we're going to see. We are not going to go into the legality today, but rather what is in it for the employers. So I'll stick to that. Of course, you will find n number of lengthy articles, and the Supreme Court verdict itself is of 51 pages. So you can refer to all of that for the legality, but for business sense, let's get into the implementation aspect of it, and let's see what this verdict talks about and how the employers have to be ready moving forward. Without any ado, so before we talk about the verdict, first and foremost, we need to understand what is it all about. In India, we often complain about social security, right? And you know that the Employees Provident Scheme, the Employees Provident Fund and the Miscellaneous Schemes Act was, I think, in 1952 or something. At that point in time, there was no concept of social security at all, which means there was, for the non-government employees, there was no pension at all. So in the year 1995, through amendment to the law, a pension scheme was introduced. So whoever are the members of the EPFO will also contribute a part of the employer's contribution towards the pension scheme, so that there is some kind of social security after these people retire. There is a big difference, right? Government employees retiring, they are automatically given pension, versus the private employees, majority of you and me retiring, where we did not have the option of pension at all. So in 1995, this was changed, and a pension scheme was brought in, which said, okay, so you divert, the employee's contribution is completely going to the EPF, Employees Provident Fund, and the employer's contribution, a part of it, which is 8.33%, will go towards the pension scheme, and the 3.67% will go towards the Provident Fund. So this was decided, and people were happy because from nothing, we are now going to get some kind of pension when people retire. So the concept of this pension scheme was to generate a sufficient corpus and to use the interest which is generated out of that corpus and pay the pension of eligible members, right? Now this the limitation was about 5,000 rupees. We are talking about 1995s, when the salaries itself were 3,000, 4,000, 5,000, 10,000, all of that. Not the fancy 5-digit and 6-digit salaries that we see today. Obviously not the ones that freshers demand today. You and I would definitely agree on that. But coming back to the topic, so this 5,000 was later amended to 6,500 because of inflation and all of that. And in 2014, a very important amendment was brought into the employees' pension scheme. So this amendment spoke many things. We are only going to look at what you can see on the screen. It said that the maximum pensionable salary will be capped at 15,000 rupees, right? Let me reiterate. It said, the amendment said that the maximum pensionable salary will be capped at rupees 15,000, which means if you had your actual pensionable salary to be 25,000 or 30,000 or 40,000 or 50,000, whatever the case may be, the pension will still be, the pensionable salary will still be capped at rupees 15,000. So this was a very important part of that amendment. The second part of that amendment was that you can opt to continue the pensionable salary on your actual salary and not 15,000 rupees, and 6 months time was provided for this. So by default, it was the actual salary. Now with this amendment, they capped it to a pensionable salary, right? And then they said that the default option would be that we will cap it at 15,000 if you don't provide any option. If you don't exercise the option to, opt on the actual salary, we will cap it at 15,000. This was the default option that was provided. And then it also said that because you are earning more than 15,000 rupees, you belong to the 10% or the 15% at that point in time. And you cannot be considered, you and I cannot be considered as the normal people. We have to contribute an additional value of 1.16% on the salary exceeding the pensionable salary. You can see that in the middle. So all of these amendments were brought in by this particular change to the employees pension scheme in the year 2014. Something that is not mentioned on the screen, but which also was amended was how the pension would be calculated. So earlier, the pension used to be calculated on the basis of 12 months of pay, right? Whatever is the average last 12 months drawn salary, based on that, the pension would be calculated. With this amendment, that was also changed to the last 60 months. So it went 5x from 12 to 60 months. And that saw a lot of reduction in the pensionable, in the pension that was being received by people. This agreed a lot of people, of course, right? First, you are capping it to 15,000. I mean, what would you get if your salary was 50,000 and 60,000, but the pensionable salary was capped at 15,000? You would not get anything with which you can actually live. So the real, fact of social security was being lost, and this aggrieved a lot of parties involved. And I think about 52 or 55 civil suits were filed against the EPFO, predominantly in Delhi, Rajasthan, and Kerala. And all of these, courts held multiple consultations with the EPFO, listened to both the parties. So what the aggrieved parties said is the pension scheme was introduced in 1995 as the right to social security. That EPFO is actually limiting it to 15,000 rupees. My right to social security is being lost, is what the parties claimed. Second, lack of transparency or clarity. So, we saw earlier that there was an opt-in period of 6 months that was provided, right? This was not very well transpired or communicated, that the default option is something that benefits the EPFO, it doesn't benefit you and me, right? Whereas the default option of a government scheme should be in a manner that benefits the beneficiaries, and it shouldn't benefit the organization. So there was a lack of transparency and clarity. And third was the issue of non-parity. The 1.16% that the EPFO was asking as additionally to be contributed, people felt, hey, I'm paying my taxes, I'm paying this, I'm paying that, and I am getting something in return to the salary that I am making, right? And I am contributing to the EPS scheme in relationship to what salary I am drawing, because the contribution to the EPS scheme itself says that 8.33% of the employer's share has to be diverted to EPS, and the remaining 3.67% of the employer's share shall go to the EPF. So it is from my own money that the government is going to pay me pension. Why should I contribute the additional 1.16%? So there was this issue of non-parity. You are not treating everybody fairly. You are treating the people who are drawing less than 15,000 rupees salary and versus the people who are drawing more than rupees 15,000 salary, you are treating them differently. So these were the three major standpoints that were on the basis of which civil suits were filed, and all the courts ruled against the EPF. In a very landmark judgment, the Kerala High Court came down very heavily on the EPFO and said, EPFO guys, what you're doing is not right. And this, whatever amendment you have done to the employees pension scheme in the year 2014 stands null and void. Now, all of these guys were confused, right? The EPFO then subsequently decided to appeal against the judgment of the Kerala High Court. And first, I think initially the Supreme Court rejected the appeal, and then after rejecting the appeal for the first time, a review appeal was filed in the interest of the nation. This time, it was not only the EPFO, but also the Union of India, which is the government of India itself, decided to support the review petition of the EPFO. And subsequently, it was listed for hearing in the year 2021. And hearings have been happening, and now we have seen the verdict. Right. So these three issues are the loci, are the focal point. The right to social security, whether I earn 10,000 or whether I earn 100,000 rupees, I have the right to social security. This is one contention of the aggrieved parties. Aggrieved parties meaning people like you and me. The second contention was there was lack of transparency and clarity. We did not know that, if I don't do anything, you are automatically going to cap my pension at rupees 15,000. So that concern of lack of transparency and clarity also came in. And the third item, of course, was the issue of non-parity. Why are you asking me 1.16% more? Right? Everybody is going to get pension. Everybody is contributing to the pension scheme in relationship to their salary. So why are you asking me more? Me meaning those who have exceeded rupees 15,000. Why are you asking me more? So these were the three contentions, and we've read the. I don't know if you have read it, but at least you have heard in the year 2018 and 2019. All these courts pronounced their judgment, and they said the EPFO's amendment to the employees pension scheme 1995 is null and void. See, if you look in terms of the EPFO's approach, what they say is that the salaries have risen multi-folds, and it may not be possible for the EPFO or for the corpus to generate such a large interest which can support everybody. So that was the contention, point number one. Point number two, their contention was, the central government has decided to contribute, is agreed to contribute 1.16% fairly for everyone. Right, and that is why this cap of 15,000 rupees has come, so that there can be some limitation on what the central government can also contribute. Otherwise, it looks like we are taking the taxpayers' money and we are funding the rich and the famous, the paid guys. That was what the EPFO's contention is. So what happened during the SC verdict? Let's see. As you all know, EPFO went to the Supreme Court of India, and then these are the two things that were upheld by the Supreme Court. So the Supreme Court, of course, it's a three-judge bench. They've gone through quite in detail the employees pension scheme 1995 amendments. Most of the amendments were upheld by the Supreme Court. What the Supreme Court said is the EPFO has the authority to make these changes, to make the changes of the maximum pensionable salary in the interest of the larger group of population, which predominantly is the one which earns less than 15,000 rupees. So in their interest, the EPFO has decided to cap it at 15,000 rupees, which is a good thing. So they have upheld that amendment. They have also upheld that you can opt for pension on actual salary and not on pensionable salary. right? They have also upheld that part of the verdict. And what they have rejected is the contention that EPFO is asking us 1.16% on the salary exceeding the pensionable salary. So the Supreme Court also has said, no, you cannot ask the members of the EPS to contribute 1.16% more just because they are earning more than 15,000 rupees. You have no authority. So the exact legal word that they have used is ultra vires, which means you don't have the legal authority to ask this, right? And for EPFO to get that legal authority, an act has to be passed in the parliament, which is not going to happen. So this 1.16%, whatever you are asking cannot be asked any more, is what they have mentioned. The second thing what they have mentioned is you give 6 months time for the people to exercise, and the statistics show that less than 0.4% exercise. From the default option was pensionable salary capped at 15,000. Less than 0.4% went to the option of pensionable pension on the actual salary. So the time frame that you gave as 6 months did have lack of clarity, did have lack of transparency. And in the meanwhile, there were also cases filed in all of these high courts. So we reject your contention that sufficient time was provided. So this was also rejected. Another thing that was also rejected was a recent, not a recent, I think in 2017, suddenly from nowhere, EPFO came out with a circular saying, no pension shall be provided for exempted establishments. I mean, no pension on the actual salary shall be provided to established exempted establishments. You know what are exempted establishments? Those who are managing the provident fund by themselves. Those are called as exempted establishments. Now, managing the provident fund by ourselves is a favor that we are doing to the EPFO. Instead, this is how we get repaid. I hope no EPFO official is actually listening to this webinar. Nevertheless, so this was also rejected. They said, no, you cannot say that I will treat unexempted establishments separately. That is, who have the EPFO and the EPS with us, and who don't have the EPF with the EPFO, and they manage it all by themselves. You cannot treat both of these parties differently. You have to treat everybody fairly. So that circular was also squashed. It was rejected. Now, so that there are two things that the Supreme Court has upheld, and then there are three things that the Supreme Court has rejected. So what is in it? What is the actual stuff? So while the Supreme Court has upheld that the maximum pensionable salary limit can be capped at 15,000 rupees, what the Supreme Court did not agree was the time of 6 months provided was, and in 2014 was not sufficient. So what the Supreme Court has done is that it has some special powers. Consider it like a genie, right? The genie that the Aladdin had. The Aladdin, he rubs the lamp and the genie comes out, something like that. So Supreme Court used these genie powers, and it has now said that for 4 months from the 4th of October 2022, I don't know whether it is going to be the 4th of October or the 5th of October, the next working day of the judgment. We don't know that, but it may be 4th or it may be 5th. So for 4 months from 4th of October 2022, the SC has exercised its genie powers and said those who were members of the EPS scheme as on 01/09/2014 and did not opt for pension on actual salary now have the option to do so. So big hand to the Supreme Court. It is a really big judgment that has come out in the benefit of the employees, in the benefit of the members of the employees pension scheme, because many times all of these updates, all of these come in very technical nature. They come as circulars and they come as notifications, and I don't know whether in 2014 Twitter and Facebook and WhatsApp were this famous as it is today. So probably there is a real case where you and I, we did not know that this option was there. So the SC has said, now publicize this option, and everybody who were members as on the 1st of September 2014 in the EPS scheme, give them further time of 4 months from today to opt for pension on actual salary. If you are a member of EPS, which means if you were employed and you had a PF number as on 01/09/2014, now for the next 4 months, you have the option to exercise pension on your actual salary and not on pensionable salary. Are you expected to pay more? No, you are not expected to pay more. What is going to happen is the money which went to the EPF will automatically go to EPS. That is all that is going to happen, right? So that you are not expected to pay much. Anyway, this 1.16% also has been rejected by the Supreme Court. But what the Supreme Court also said is, we are going to allow the EPFO 6 months time for them to see how they can work around this 1.16% if they want to increase the 8.33%, right, to 9% or to 9.2%, so that you can manage the corpus and whatever. So the existing system of contributing 1.16% will continue for the next 6 months until EPFO comes out with detailed guidance. This is what, in addition, has been told by the Supreme Court. So I think this is a very welcome verdict from the Supreme Court. The 4 months of time will open a lot of Pandora's box. I will come to that, but will also, if we have lost some people to the grave, it may make them happy. So what do employers have to do now? Think about it, right? All of this is executed through the employer. If you have, if you're offering employees pension scheme, then what do you have to do? So first and foremost, you have to take a list of people who are currently working with you, but have joined on or before 1/9/2014, and sensitize those employees about this option. Right? It is very important that you sensitize those employees. As employers, I think the SC has done a great job in giving this 4 months of extension. It is a once in a lifetime opportunity, I can say. There was no need for the Supreme Court to use its genie powers and do this, but yet it has done for our benefit. I mean, who doesn't want pension on actual salary? Think about it. Everybody wants pension on actual salary. Who doesn't want pension on actual salary, right? After all, pension is something, whatever small, it could be 3,000, it could be 5,000, it could be 10,000, or even it could be $1,000. It's still important when after we get to 58. So first is to sensitize employees who have joined on or before 01/09/2014 regarding this change. And in the due course, I'm sure the EPFO officials are scratching their heads to see how this can be, how the SC verdict can be made possible. Is there an option for the EPFO to file for an appeal? No, there is no option for EPFO to file for an appeal, because they have filed an appeal and then they have got here, right? So there is no option for EPFO to file for an appeal until and unless they find out some other innovative way, but for which the options are very lean. So in all probability, the option provided by the Supreme Court will be upheld, which means that the employer and the employee both put together have to make a joint declaration to the EPFO. Now, looking at the digitization of the EPFO, I believe that this will also be digital in all ways and means, and will be done through the employer's login as well as the employee's login, right? So So once this option is enabled, it could take a week, it could take a month. We don't know when EPFO will do the necessary changes to enable this option. But once it is done, immediately have those employees who want to opt for, pension on the actual salary and not on the salary capped at 15,000 rupees, make the joint declaration, right? So I believe there will be a request, either the employee has to generate from his login, which will automatically come to the employer, and then the employee has to digitally sign and accept that request, which will then get logged. Something like this will be there. I don't know what exactly, but something of the sort. Or there could be a possibility where the employer themselves can, let's say, upload the UN numbers of the employees who are opting for this particular increased pension salary. Yes. Now, where do you not have to worry? I'll tell you. If your organization is already limiting, the contribution, they're not paying on the 12% of basic plus DA, but they are limiting it to 15,000, which means the maximum that the organization pays 1,800 rupees towards EPF, and appropriately 1,800 rupees there, which says 1,250 goes to EPS and the remaining goes into EPF. In that situation, you don't have to worry about this notification at all, right? Because the limitation is already set on a very higher level. So those employers who don't have this limitation of 15,000, those employers will have to undertake these two steps and will have to kindly help their employees choose pension on actual salary. What may happen, you may ask, okay, what happens if they exercise this option? So their money, which was earlier diverted to EPF, will then get diverted to EPS, which is fine, because anyway, that the money is going to come back to you in terms of pension sometime in the future, right? So this is what is going to happen. So before we open for question answers, I know there are a lot of questions that you guys may have. The more the questions, the merrier, because I know this is a very, very important topic, and that's why we have dedicated the whole of this webinar towards it. Before we get into the question answers, I wanted to sensitize you on some facts of who we are. 13 years and young, 153 clients and counting. We process about 1.2 million transactions per quarter, with 99.5% pat on the back accuracy rates, and 16 cities in India. We work to issue about 500,000 Form 16s. We are people, we are nerds who are obsessive about payroll, taxation, compliance, and accounting. And if you have any needs in terms of any of these verticals, please do not ever try to hesitate to contact us. With that, Divya, my colleague on the call, who diligently makes sure that these webinars happen on time, without much hindrance and everything, I will request her to open up one poll, which is the feedback poll, and some questions for you. It will just take a quick second while I'm opening the window for questions on the chat. I also have, yes, so the poll is there right on your screen. Please help us answer this poll so that we can design these webinars to be better the next time. It'll just take a couple of seconds, and then there is also a sales question. Don't worry, we will never ever spam you. Wonderful. So while you do that, guys, I hope you're all able to see the sales poll. Yes, please take a quick minute to participate in the sales poll, and then we'll get to your questions one by one. Thank you very much. I see some responses. It is beautiful that you're coming up with your responses. And we always have a lot of friends on chat. Sorry, a lot of friends who keep attending. So why don't you identify if I've missed, if we have met earlier, if you've always been a part of this webinar, say hi to me on the chat, and hi to all others who keep diligently coming back to our webinars every month. So for all of you, while the sales polls are being attended, the webinars, this monthly webinar is a regular webinar every Wednesday, 10:30 to 11:30. We meet and we discuss the latest changes in any of these 4 areas, if there are any. Hi Suman, hi Shweta, wonderful meeting you. Yes, Deep Town Pay. I'm sure your real name is something else, but hello to you as well. Pawan, wonderful. Hi, Pawan. Good morning. Aditya, hello, sir. Hello to you too. Hey, so just a couple of more people, if you guys can finish the poll, I'm sure there are a few people who are attending it. Would be very, very thankful for you to participate in our poll. And yes. Remy laptop, hi, hello, thank you for being a part. Thank you to you too. Yes, Revati, hello, Deepak, good morning. Yes, now we are opening up for questions. Questions, please. Questions. So one of the questions that I asked my team just this morning, just before starting the webinar, right? We had a brainstorming last evening. I had asked 2 of my managers to work on this, because sometimes the verdicts are to be read in detail, and it is differently understood. So to both of them, I asked, what about those people who have since then retired, right? Who were members of the pension scheme on 01/09/2014, but have retired, let's say in 15 or in 16 or in 17 or in 18 or in 19 or in 20, whatever. What about those people who have retired? So right now, we don't have clarity about what is going to happen to those people who have retired and who have started receiving the pension, because in all probabilities, they would have also withdrawn their EPF balance, right? The differential was supposed to go from your EPF balance to your pension corpus. So I don't know what may come out for these retired people. We'll wait for the authorities to respond. So that is one question that I had, which let's call it a sumoto question. Okay. Suman asks this. Suman Venugopal says, is the pension is retrospective with effect? Yes, it is. It is with retrospective effect from. So if you exercise it now, it will be with retrospective effect from the date, from 1/9/2014. It will be from there. Yes, Tamilarasi has a question. Are there any other statutory updates? Between the last month and this month, not many, but I will also leave that question open to Padmajyoti and Arun, who are also here. Guys, if there are any other statutory updates, just unmute yourself and speak. Krishna asks a wonderful topic. Thank you. Morning. Yes, it is. If an employee, okay, Pawan says, if an employee had EPF deduction in his previous organization almost 5 years back, can she opt for PF and the pension scheme in actual, or has to restrict it to 15K? 5 years back means it could be 2000, it may not be 2014, but it will be 2017 or 2018. In that case, it will be restricted to 15,000. The pensionable salary is restricted to 15,000. The contribution to PF is a decision taken by the organization, right? Whether they want to contribute 12% of the basic plus DA, or whether they want to contribute 12% of basic plus DA, but limiting it to 15,000 rupees. is a decision that the organization usually takes. I hope, Pawan, your question is answered. Are there any other updates in compliance? I was expecting to get more insights on payroll and compliance. So one of the big updates that were discussed at length during the previous webinar was with respect to, the movement of employers from a tax deduction on declaration mode to tax deduction on proof mode, which was discussed in length in the last webinar. But between the last webinar to this webinar, not much in terms of payroll and certainly not much in terms of compliance as well. And then, as and how there are changes, as and how there are compliance updates, we discussed it during this webinar. In addition to that, we also have a very thoughtful blog. You can see our blog address here. I'm sure Divya will also mention the blog link on the chat. You're also welcome to subscribe to our blog, because then you don't have to wait 1 month for us to discuss it during the webinar. But Abhi, if you have specific question, even if it is not related to this Supreme Court verdict, happy to take it up. So please feel free to chat. If any employees are linked in EPFO before 2014 and the employee wants exemption in PF, is it possible? If any employees are linked in EPFO before 2014, okay, which means they are a member of the EPF before 2014, employee wants exemption in PF, which means the exemption of not contributing to PF if their salary exceeds 15,000. I don't think that is possible, because this update of not contributing to 15,000 if your salary exceeds 15,000 came very recently, not in 2014. So those who were a part of 2014 have to mandatorily continue to contribute. Suman asks, what is the treatment given to the interest calculated on EPF from 01/09/2014? What is the treatment given to the interest calculated on EPF? So I believe, Suman, what you're asking is what happens. No, so there is no change to the employee's provident fund, right? If you opt for pension on actual salary, then what will happen is that EPFO will recalculate automatically, and they will move the balance, whatever you should have paid. If you had opted in 2014, they will move that money into the EPS. And I think that interest, what they have already paid us in our passbook, will also get reversed back, because it is intended to go to the EPS. So they will reverse back the interest that is paid, is what I think your question is. Pawan asks, like if the organization has both options, limit 15K and actual salary. Sorry, Pawan, if the organization has both options, limited to 15K and actual salary, what? Sorry, I'm not able to figure out your question. But if you're asking, can the organization have both options of limiting it to 15K as well as paying PF, that is 12% on 15,000? 12% on the actual salary in a CTC based environment with a basket of benefits or a bouquet of benefits that they say. I think it is possible, but it is complicated in terms of execution. There is a question from Ankita. I think this is a question either on LinkedIn or on YouTube. One of the members of organization is not enrolled in EPS by his previous employer, but we do have a provision of EPS. So is it possible to enroll him now in EPS? Arun? So I think why they would not have enrolled them in EPS is because their salary would have already exceeded 15,000 rupees, right? And there is a change, not the recent change, but a change much before that. If your salary is exceeding 15,000 rupees, then there is no need for you to contribute to the pension scheme. But anyway, I will let Arun. Arun, can you unmute and answer Ankita's question if there is any change? What do you think, Arun? We're taking questions one by one. Where is my friend Arun? Can you fetch him? Is there a genie that I have which I rub and Arun comes? Rajeshwari asks, what if someone opts for this scheme, but the EPF money, major portion is withdrawn? That's a question. So the operative part of the judgment has to be framed by the EPF, right? So the operative part is yet to be framed. So there is a possibility, what you said, Rajeshwari. See, sometimes during COVID they would have withdrawn, and the the money may fall down, that they cannot move the sufficient money to EPS. In that situation, there is a probability that they may not be able to take it up at all, but we really don't know, right? Let's wait for the operative part to be released by the EPFO. I think Arun is back online. Arun, yeah, we missed you.
So
Question from Ankita.
Yes, can you read the question? I'm not able to.
One of the members of my organization is not enrolled in EPS by his previous employer, but we do have a provision of EPS. So is it possible to enroll him now in EPS is the question.
Yeah, it is possible. The previous employer has to provide, through the previous employer, we have to provide the Form 3A, and we have to make sure the EPFO is followed up, and then we'll get that done.
Okay, Ankita, whichever platform you are, I hope you heard what our friend and expert Arun said, that it is possible. You have to get Form 3A from the previous employer and give it to the EPFO and follow it up at the EPFO end for this employee currently in your organizations to start contributing to EPS. It is possible. Yeah, Ankita, thank you very much. I'm sure you are happy about the clarification. Okay. Few more. There are two people who have raised their hands. Divya, would you unmute one after the other?
Yes. Okay, I unmuted myself first. Can I speak? It's Akshata here.
Yes, please. No problem.
Yes. This was my first webinar. I'm glad that I attended it, and I got many details, but it's a working day and lot of disturbance. So I hope I'll get the recording of the session so that I can thoroughly note down few things which I have to inform the management about.
You definitely.
But my question, yes, my question is, like, now you said pension scheme is effective from 1st September 2014. So what do we do with the employees who are already? How do we do the repayment of starting from 2014? It's been more than 4 years now, if it is effective from that. So I was a little confused about it.
Yeah, good question. What is your name? Akshita, wonderful question. So Akshita, I will tell you what happens, and I'm sure it is going to benefit the larger population also.
Yes.
Is there any other question that you have, Akshita?
No, nothing as of now, only this.
Wonderful. So please mute yourself so that I can be crystal clear. So thank you for that question, Akshita. What happens, guys? Let me take an example. Let us say if the basic plus DA of somebody, of an employee, is 50,000 rupees, right? That's the basic plus DA. What happens? 12% of the employee's contribution is diverted to EPF. It automatically goes to EPF. And of the 12% contribution of the employer, 8.33% is supposed to go to EPS, and 3.67%, the balance, goes to EPF. Correct? Now, in 1/9/2014, if you have not opted for pension on actual salary, what would have happened is you would have still paid that 12%, right, of the employer's contribution. But what would have happened is only 1,250 rupees would have gone to the EPS scheme, and 50,000 into 12% is 6,000. 6,000 minus 1,250 would go, which is 4,750 rupees, would have gone to the EPF scheme, right? So the employer doesn't have to do any additional contributions because the money is already in the EPF scheme. So operatively, what may happen is the money that has got contributed into the EPF scheme, the employer's share, will move to the EPS scheme, right? So there is no contribution additionally that an employer has to do now. No backdated calculations or anything that you guys have to do now. Is of course, there are some exceptions, like one of the questions was, what if the employee has already withdrawn? In that case, I don't know what the situation is going to be. We will have to wait for the operative part of the judgment. I mean, for the operative part of EPFO to come out, clarifications to come out with. Yes. So I hope I'm clear about that. There was one other person who had raised their hand. If they want to speak, you can unmute yourself and speak. Okay, there are a few more. Okay, I answered. Wonderful. It continuation of last question. Got it. Okay, few others. Okay, Margaret Joseph asks, what if an employee is opting for pension on total salary and then again wants to switch to the earlier choice? Is there an option to change? I don't think there is an option like that, right? I know what you're asking. I think what you're trying to ask is, what if the employee had opted for pension on actual salary and now wants to shift to pension on a maximum pensionable salary of 15,000? Is there an option now? No, there is no option now or anytime in the future. I think the option that was there earlier, I mean, the option now is only to go from maximum pensionable salary of 15,000 to the actual pensionable salary. Arun, I hope my answer is correct. Thank you. Yes.
Yes, sir. Yeah,
okay.
You are correct.
Thanks. So interest credited to employer contribution will be reversed. Yes, it will be reversed. Suman, I think it's in continuation of your earlier question. Yes. An employee who have partially withdrawn is eligible to offer pension on actual salary. I think whether you have partially withdrawn or what, until and unless there are enough funds in the EPF scheme for them to transfer to the EPS scheme, you still can, opt for it, is what is my thinking. But we don't know, right, what bureaucrats think. I think it's best to wait for the operative judgment. And that is why, friends, I always keep saying that don't dip into your EPF savings. Don't withdraw them. Don't use them until and unless it's for really unavoidable purposes, like a medical emergency in the family, or like the old years, right? Loan for higher education, anything that really matters. But nowadays, we see people withdrawing to buy an iPhone. Man, that's not the reason why you should be contributing to EPS or EPF. Sorry, iPhone is not something that you should. I'm not against Apple products, but what I'm saying, example. Deepak asks, if new employees joined after 1/9/2014 and salary is above 15K, is there any notification for option in PF exemption? After 1/9/2014 and salary is above 15K, then the maximum pensionable salary will be 15,000 rupees, which means you cannot contribute more than 1,250 rupees to a pension scheme, and your pensionable salary is limited to that 15,000. Deepak. Okay, Radha Relativity asks if the company is restricting to 15K, then this option is not applicable. Yes, this option is not applicable if the company is restricting to 15K. Correct. Okay, Tamilar C asks, as you are talking only about enrolled before EPS on before 2014, what about the recent employees, those enrolled in EPS? See, there are no changes to the this particular verdict only affects those who were a part of the EPS scheme as on 1st of September 2014. This verdict only affects those. So let's say somebody has joined in 15, 16, 17, 18, 19, 20, 21, 22, or even yesterday. This particular verdict has nothing to do with those who have joined after 1/9/2014, right? So this verdict only applies to those who have joined on or before 1/9/2014, which means they are members of EPS as on 01/09/2014. So this verdict is only for them. Hence, my all of my discussions is with respect to that. Now, there are, why this is so important is because you may really have senior people, they have joined in 2014, which means by now they would have completed, 8-9 years of work, and they would have gone up the ladder, senior people, all of them. So they will understand, they will expect you to, as I'm sure you guys either represent the HR, finance, or the payroll function in your organization. So they will expect you to provide clarity on this, and that's why this particular webinar has been organized. Okay, I think we've pretty much done all the questions. There was somebody else who had also put their hand up, who had raised their hand. Is there somebody who still has a question but has not asked? No, nobody. Okay, wonderful. In that case, how about you guys? I inviting you guys to our LinkedIn platform, where we have two very important things happening. One, we publish a newsletter every fortnight, once every 15 days, which has all the relevant topics regarding payroll compliance, accounting, and taxation. If whatever articles that you see on our blog are also published there. And the second thing that happens is there is a very interesting quiz. Divya, can you please tell me how many weeks are we into this quiz now? I think it should be about more than 50 weeks or 50 quizzes that we are conducting on every.
Yes,
how many? 50, 100? What is the number?
50 plus.
More than 50, between 50 to 100. So we have this quiz that happens, very interesting questions, not too simple, not too complicated. Sometimes the questions are really intriguing. I invite you to follow us on LinkedIn so that you can also participate in this quiz. And then it helps you improve your contextual knowledge and your effort in becoming a better professional. I'm sure the quiz program helps. And then there is so much of participation. It goes into so many groups and all of that. Okay, I have a question. Kirti asks, should the employer raise a request to opt higher pension? Yes, so that is the expectation, that a joint declaration has to be submitted by the employer as well as the employee, right? This joint declaration is what authorizes or tells the Employees Provident Fund organization that both of you have agreed to pension on actual salary and not on salary capped at ₹15,000. Okay, I hope that is answered. Kirtan, yeah, I hope that is answered. The joint declaration required. Yes, Balamurgan, you are absolutely right. Okay, I think we are just about time to close. Friends, it was wonderful meeting all of you after. For me, it was a gap of 2 months, because last month Padma Jyoti snatched my opportunity to meet you. But nevertheless, we'll continue meeting, and it's always wonderful talking to all of you. Thank you very much, and keep in touch. Follow us on LinkedIn. Follow us on our young YouTube channel. Give us your comments. Tell us topics that you want us to talk about. Be the subscriber of our blog. As always, have a wonderful day, wonderful week, and meet you again the next week, second Wednesday of December. Until then, tata, bye bye.